What's going on, guys? Welcome back to the channel. What we're going to do here is take a look at a couple trades. I'm not going to lie, these were terrible trades today. Ended up losing about $4,000 on the day. Yesterday I won about 15,000. So, it's a give and take world, but I can wholeheartedly tell you the reason I ended up losing $4,000 a day was A, because I just made bad trading decisions, but B, it was definitely because I was a little overconfident in myself because of what I had accomplished just yesterday. So let's get into the trades and I'm going to show you guys what's going on. So IMV, pre-market, I didn't like it because we were too high in the buying cycle. So we had come down lower to this point right here, all right? Now, at the time when I was looking at entering the trade on IMV, we were down here, at like 590, okay? Now, because the day has progressed a little bit, my channels look a little bit off, but just know that this yellow line was pretty much right where this white line is now currently, which means that at the time, we were on support for IMV. And that's why we kind of bounced like this and had this bounce, okay? So I ended up getting long on this candle. I ended up taking a big position, okay? I'll put the trade on here. I mean, it was a fairly big position, okay? It wasn't monster, but you can see what happened. So I ended up going in 4,000 shares long on this candle, okay? Well, at the time that I had pressed enter, pretty much I joined in everybody, and the market makers ended up slipping my trade pretty much all the way up to the high. You can see the high of this candle here on the green side is 680. I got filled at 676. We don't have to go into about how I could alleviate this, change brokers. We all know that. But the purpose of this video is to teach you that, if you do a market order and you don't get in soon enough before the herd with a market order, then the market makers will use your order to create the breakout. So essentially what happened today was my 4,000 share order caused slippage or helped create slippage on the upside for myself. But ideally, what market makers had done today with this order, when the candle was about to break, I decided to buy. I waited a little too long, and then my order was used to break the stock out of this previous high while giving me a fill right at about 676. And then with the spread, there was really no way of getting out on this high. And so anyways, we ended up having to take off the trade, 4,000 shares, with slippage on the way down as well. So pretty much in and out after two candles, knowing that the trade was not going to work, okay? So you can see I ended up taking a loss of $2,700. So not good, not what you want, all right? Now, one other thing that I would like to point out for you guys is this dotted line here, okay? This dotted line. So this dotted line was actually right here. Okay, so this dotted line was our resistance. So I knew that we had the dotted line coming up, but when I was trying to purchase down here 4,000 shares, the price was 619. So we had to move from like 615, 620 all the way to 680, 670. So I knew there was a good area for opportunity to pop the candle. That's why I was willing to go in, because there was enough profit potential that even if we had hit the dotted line, which was right here, there was still, 50, 60 cents potential profit. If we had broken through the dotted line, then we would have squeezed off $1, right? So I knew there was about a 50-cent area for potential or profit going up to the dotted line. It was a question of whether or not we were going to break through the dotted line. So even if we didn't, if the entry was good and I didn't get as much slippage as I did, then this trade would have been okay. We probably wouldn't have taken a $2,700 loss. One of the issues too is I just went in full size with 4,000. I just went in straight 4,000 shares. When you do that, and take such big trading sizes on TD Ameritrade, naturally you can occur to get some slippage, right? So if I went smaller shares, I probably wouldn't have got as much slippage and the trade wouldn't have been as bad as well. So just a couple pointers for you guys, okay? So the next trade was also on, give me a second here. The next trade here was on PRCP, I believe it was. Hold on, let me clean this up and make everything a little bit better. Okay, PRCP. So PRCP, as you can see, trends up all day long. It's kind of iffy here and there. I will tell you that the trade on here looks kind of goofy, so I'm just going to kind of walk you guys through it. All right, so we squeeze up in the morning, we come all the way down. Now, at the time when we came all the way down, okay, there was a good amount of support here. Actually, this white line, I believe this white line was right here. So we were sitting on our regression trend, I believe. Okay, and then this dotted line was actually like right here is what I think was going on. It's hard to remember fully. But nonetheless, you can see that the market opens up. Okay, market opens up, we kind of push up, we come down, doesn't work, we hold, we hold. You can see the volume starts to increase in this direction, and we started slightly shifting to buying volume, right? We were selling, 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 and then we shifted to buying volume. This stock, PRCP, was easy to borrow, which basically means anybody that was on TD Ameritrade, you know, across many of the trading brokers, were able to short sell against the stock, which then also creates the opportunity to squeeze the stock. So this is kind of one of my go-to secret sauce plays, is that whenever we have an easy to borrow stock in TD Ameritrade, we don't look to short, we actually look to long, so we can take out most of the retail traders that are going against the grain on the stock. Okay, so since I'd made so much money trading yesterday, I got a little overconfident on both those stocks and kind of just jumped in too early on the day without really letting them set up. So really the reason I lost today was because I was too impatient. I was a little aggressive on size because I had traded so well yesterday. So I was aggressive on size, very quick to enter, wasn't letting things set up fully. So I was really aggressive, really quick on some of those entries. So as a whole, you can't do that, right? You want to be, you know, more patient, let things set up. But that was it, right? So this trade, we had gone in a couple thousand shares, and again, kind of the same concept. I got a good amount of slippage, basically right up into the peak, which was our resistance, and then I had to sell into some slippage down here. Of course, we came up later, but we really never fully broke out. You can kind of see we just kind of pushed up, faded down, pushed up, then we fade back down. So we never actually fully did one of those really big rips on this stock for the day. It's been throwing traders for a loop, and what I can say is it's definitely a little bit sketchy. So those were the two trades, and just so you guys are aware, you can see right here, $1,500 lost there on that stock. So as a whole, you know, not the best day, but we can live with it. All right, so we're going to be moving into the next couple trading days, hoping to do better. So I hope you guys liked the video. Hope you learned something new. The main takeaways from this is that, you know, no matter how good you trade, you can always make mistakes. And a lot of it honestly comes down to 100% the mindset, the psyche, being patient, waiting for setups, not being too aggressive. I can promise you, when you come into the market with that in the forefront of your mind, saying, I'm not even going to take questionable trades, I'm only going to take trades that really make sense after I've seen them set up, your consistency is usually through the roof. So today was a day where I definitely didn't have any of that with me. And so you pay the price, okay? So hope you guys liked the video. Hope you learned something new, and I'll see you guys in the next one.